The bear is back as the S&P 500 looks to crash. I'm your host, Steven Van Metre, and thanks for joining me today for part one of the Sunday Chart Show, where we look at the technicals of the S&P 500, Nasdaq 100, Russell 2000, and junk bonds. Let's kick it off with the S&P 500. We've got the breadth indicator here. We're looking at the percentage of S&P 500 stocks above their 50-day moving average, a mere 15%. And the way you read this is when a stock or an index is above its 50-day moving average, it's bullish. It's considered a bullish trend and momentum's behind it. Those below, well, that's a bearish trend. And what this is saying is 85% of the S&P 500, well, is bearish. It's the downturn. It's in momentum. It's fading here and fast. And you can see, you've looked back at the percentage of S&P 500 stocks above their 50-day moving average, just in late, kind of March, early April, we see this thing up around 70%, and it's crashed down to 15%. And look what happened to the S&P 500; it's gone down. Now, if you've been wondering why on Friday people came in and aggressively bought that dip, well, because they believe the market is so oversold at this point that the breadth can't get much lower. And while there's some truth to that, but let's zoom out and look at the bigger picture here. The percentage of the S&P 500 stocks above their 200-day moving average, a mere 26%. In fact, after Friday, it got worse. So the market kind of rallied back, but more stocks fell below their 200-day moving average. And this is what happens in a market cap weighted index. The top 10 stocks in the S&P are going to do all the heavy lifting as other stocks in the index start to fade. And when you see this, way you read this is if a stock or an index is above its 200-day moving average, it's considered to be in a bull market, below in a bear market. So now you have about, we'll just say 75% of the S&P 500 in a bear market and fading. But again, this is unusual to see it this low as we zoom out to the historicals. And this is why people are buying it, because when it gets down to this level, of around 25 to 26%, and we can see here in 2015, 2016, you can see back in 2008, you can come back to the great the dot-com bubble here. And what happens is when it gets to this level, you'll notice it pops up oftentimes. You see how it pops up here, here, and here, and it goes from, somewhere around this 25% level back up to, around, say, 50, 55% level. Well, that's that bear market bounce that people are looking for. They're looking for some sort of move higher here that they can kind of count on, and they're willing to buy and take the risk that the Fed perhaps may capitulate. Well, unless in about a week and a half, we're going to see quantitative tightening and no sign from the Fed that they're backing off at all. Now let's look at the momentum indicators, because we see momentum is getting worse. We're going to look at the relative strength indicator. A number over 40 means positive momentum. Price should be rising or will soon follow. Below 40, that is not good. And notice how momentum has been trending down. And other than brief moves over 40, its momentum is still weakening. And look at that. It just coincides with price coming down. So price is following momentum lower. And the bulls certainly need this to pop up. And it hasn't even gotten to oversold territory at 30. So potential still further risk for the S&P 500 to fall. And how about the MACD, the moving average convergence divergence, or as I like to call it, the crossover strategy, because the only thing you care about is this MACD, this black line crossing through the signal line, the red line. A negative cross, well, that is bearish. A positive cross here is bullish. And what do we see? Momentum, this also being a momentum indicator. Notice how the MACD has been signaling declining momentum. Right at the same time, price has been falling down. Sure, there's been some little blips of hope along the way, but overall momentum's here weakening. And the idea that people are trading this are saying it can't get much worse. Well, that's obviously the hope. Now, we've got Momentum Timer Pro, big announcement for this today. Many of you have asked for videos. Explain how to use it. Well, I've got 3 of them. So if you're on the list on Monday, you'll have access to those videos. If you're not, I'll put a link up here in the corner and the description below. What it does is it looks at the RSI over 40, a positive cross on the MACD and its own internal signal. If 2 of the 3 say buy, it turns to a buy signal here. Otherwise, it holds a sell signal across those 3 indicators. When a sell turns to buy, It gives you an indication if you should be long or short or what to do. And right now, it's looking at the 1, 3, and 6 month position on its own data, telling you that the S&P is in a downturn. The daily signals here are in a downturn. And that means if you see a buy signal pop, it's more of an opportunity to short than long. There's a video on that, a guidebook, everything now coming Monday. And the only way to get on is to be on the list. Let's look at the bigger picture here. And you see price on the moving averages are all bearish. We know they're all headed down, and the momentum is to the downside on all the moving averages. Not good. Below all the key moving average. Back down below where it's been along the way, all the way through where it was 12 months ago. Let's take a look at the S&P 500 because it is looking crashy from a technical perspective. Now we've got these supply zones, and the way you can do this on your charts is you can set the volume profile. Now on mine, you see this big red bar. That is where the most shares have traded in the last 2 years, is way up here. And as you see this being a supply zone, what that tells you is sellers are dominating in the last 2 years right here as people were bullish. This is where most people were bullish, and this is where the sellers were at. Price came through another supply zone. Buyers stepped in, and it flipped them down. So now this is a sell zone, and down here is a buy zone. So what buyers are trying to do here is pull price up into this higher zone, the sell zone, and flip these sellers and then drive it up further. That's what they're looking for in a bear market rally. But the problem is we've got quantitative tightening in a week and a half, and then we've got another 50 basis point hike from the Fed in 3.5 weeks. None of those signs are good, suggesting the next zone down for SPY is going to be around 370 if this zone doesn't hold. If it does, then look for a rally up here into, say, around the 415 range, somewhere 415 to 420. If the bulls can pull this off, this is a clear topping pattern. If you're trading these patterns, be careful. You're looking for that big bear market rally, but if not, you can easily get slammed as prices go lower, as liquidity drains from the market. So right now, downside risk, the S&P could be a counter trend rally at some point, but momentum indicators do not suggest that's in the cards. How about the Nasdaq 100? If we look at the percentage of the Nasdaq 100 above its 50-day moving average, a mere 13%. So that's 87% of the Nasdaq is in a bearish picture here. It's momentum to the downside. And again, why are people coming and buying? Because these levels are pretty low. They're abnormally low. And so when you have this many stocks under their 50-day moving average, people are going to come in and buy them, hoping to drive prices up. They drove the percentage of stocks above their 50-day moving average up a little bit, but price overall went down. That is not good. How about the percentage of Nasdaq 100 stocks above their 200-day moving average? You have now 90% of the Nasdaq is in a bear market. Again, these are what you see as buying opportunities. If you're a trader and everyone else, you're looking at this saying it can't get much worse. It seems like it can't get much worse, but well, maybe it can, and that's why topping patterns take money from people. You see it's down to these very depressed levels. Can it get worse? Well, let's look at the bigger picture, and the answer is yes. It could get down to less than 5%. Very rare that happens. You see it in the great financial crisis. You see it following the dot-com bubble, suggesting the Nasdaq has more to fall. And historically, there aren't a whole lot of up moves. Maybe a move you see from current levels back up to, say, 23%, this -2 standard deviation level. Again, what people are looking for, some sort of bear market bounce, clear topping pattern. This is not a good picture. And momentum is not behind the Nasdaq either. As we look at the RSI, and you see, again, other than some blips above 40, momentum has been to the downside, and price has followed momentum lower. How about the MACD? You had that negative cross, and it had some hope that it was going to finally get, maybe a cross back to the upside. Nope, momentum still to the downside here. No sign that this is changing its picture yet. How about Momentum Timer Pro? Clearly defined bear market here, as the videos and guidebook will teach you, as no position across the 1, 3, and 6 month, 29 consecutive sells on the daily. If you see a flip to a buy, this turns gold. I'll show you what that looks like here in a moment. And what that tells you is you're in a downtrend. You should probably be short if that's something you're comfortable doing. If you're not, then you just wait out. If you're a long-only investor, just take your time. Don't push the envelope. All right, let's look at the bigger picture. Moving averages headed lower, all bearish, momentum to the downside, below all the key moving averages, below where it was all the way through the last 12 months. No pretty picture here for the Nasdaq, and it's sitting in the supply zone too. And so that's the key here. Buyers are coming in here. They bought here before. They're looking to shove this thing up into the 320 range. I mean, they're saying, look, this can't get much worse. I mean, we've seen a huge sell-off here. There has to be some upside. They're coming in. They had a big move off the lows on Friday, driving price up. Overall, the picture is ugly. You can see the 2-year mark where sellers have been dominating, and this keeps moving down as more sellers continue to be aggressive on getting out of the Nasdaq. You look at the bigger picture. This is indeed what a topping pattern looks like, my friends. And this gets down a little bit more. It's going to blow through most, if not all, of that pandemic rally there. It's not a good picture technically of what's going on. Possibly you get some moves here, bear market rally. If you do, again, you're looking for this 320 range before you want to cover your exits. Otherwise, any moves higher, that's telling you get ready. There is more downside to come here as, again, the Fed drains liquidity. Let's take a look at the Russell 2000. Small caps often lead the large caps. This is why a lot of investors and traders look at small caps. You see the percentage of Russell 2000 above their 50-day moving average, a mere 15% here, suggesting that 85% are in a bearish trend. They're heading lower, and certain enough, you see breadth going down, you see price going down. Not a lot of confidence here, as even the move, this recent move, didn't do a whole lot from price perspective in driving the percentage of Russell 2000 stocks above their 50-day moving average. So lack of conviction in the market here. Looking at the percentage of Russell 2000 stocks above their 200-day moving average, the same number, 85% of them are in a bear market, a mere 15% in a bull market, unchanged. And notice the price rallies here, and it's literally, you're just seeing no change at all. They're still in a bear market. That's what the concern is. And how much lower can this go? Well, it can get pretty darn close to zero when it comes to small caps. There's not a lot of hope here. You see this big, long-standing trend moving down. In the past, when you see these big moves down, it tells you that it's going to continue. There's almost no looking at hope here if you look historically of what you could even make a reference point to what's happening. And that tells you Russell 2000 stocks likely headed lower, but the momentum picture is starting to change. That maybe there's a short-term bottom here, and you can see almost a 39 on the RSI. Momentum has been trending down, got briefly oversold. Notice the price following momentum lower. Now price is momentum is trying to move higher here, trying to get something going. This could be just another one of these blips that takes price back down as momentum fades. We'll see that, of course, in the weeks to come, what happens. But look at the MACD. You notice it as a momentum indicator as well. It's going down, leads price lower. Now it's trying to push price to the upside as the MACD line crosses the signal line. So potentially here, but if this doesn't pull through, it's going to roll quickly back over, and that's where you see the signal here on Momentum Time Pro. You've got a buy signal now. So you've got, after several consecutive sell signals, it flips to a buy, but it's telling you it's in a downtrend. So when you watch that video on Monday, what does it tell you? That the most probable trade at this point is to be short the Russell 2000, not long. Let's take a look at the bigger picture. Moving averages all heading lower. Momentum still to the downside, below all the key moving averages. Price below where it was 12 months ago. Why does this bottom row matter? Because computer algorithms look at this, and that's how they decide, hey, if momentum's to the downside, I want out. Let's look at IWM now. Over the last 2 years, we have said for so long that this was a topping pattern up here. Turned out to be, price came down, reconfirmed into that supply zone, is now touching right at the top of this open gap here, likely to be filled. You see it's just following the 21-day moving average down. Potential pop here and look for a drop. Where does this thing come down to? Probably in this right around this 160 before you see some buyers start to show up right there. We'll say 159 to 160 seems to be the next direction for this. Again, Momentum Time Pro, when you watch the video and I show you kind of the number of data points on this, it's showing you the most likely path is to be short in the Russell 2000 here. All right, let's take a look at junk bonds, because when junk bonds blow up, well, everything goes with it. If they're not bottoming out, the rest of the market certainly isn't. What do we see? The RSI at 35, still below 40. And if you go back all the way here to December of last year, you see momentum went down, got oversold. There's some brief pockets of hope, stayed oversold, got some brief pocket of hope, and it's just momentum's just been trending lower. Look at price following momentum down. And sure, you look at this point right here and you see, okay, price, rallied here a little bit, but then momentum slowed down and price went down with it. Look at the MACD, same story from the same time period. Momentum started slow. It got a brief spurt of a rally here and then momentum back down, trying to cross over. So you're seeing that maybe high yield bonds, try to bottom here, or maybe this is a big fake out. What Momentum Timer Pro think of it? Well, you'll find out on Monday if you're not a subscriber. And of course, this picture hasn't changed, and there's a good reason it hasn't changed, because when you look at the charts, they haven't changed much in terms of positive news here. It's getting worse and worse and worse. I mean, this is usually where you see the financial system start to blow up. I mean, this is, if you go back here to 2016, we almost had a massive recession. Here is a pandemic. I mean, you start looking back. I mean, the next major data point, aside from the pandemic sell-off, is you've got the great financial crisis. So high yield bonds not showing any sign of letting down here. That is bad news for the broad equity market. That should be your warning sign. You see there's kind of a little bit of a move here, trying to move price up. I'll zoom in a little bit. I would not be overly confident about this yet, but people are buying it at this point, but still with the liquidity drain, absolutely no confidence in junk bonds here at all. And so with that, hey, I appreciate you being fans, appreciate you watching. We'll be back soon for part 2 of the Sunday Chart Show. Bye now.